Good afternoon and welcome to our weekly livestock market update. I'm Brownfield News anchor reporter Megan Grebner. With us is University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
A lot to talk about this week, especially with the cattle on feed report that was released and some other reports. But let's start first and take a look at the market recap for the week.
Yeah, I think we start on the hog side. Cash hog prices were down again this week, down about 75 cents on the week. When you look at the futures side, pretty tough week for hog futures. When you notice many contracts more than $4 lower from where we started the week to where we ended the week, we continue to see pressure on that side of the market. The pork cutout value was just modestly lower, about 30 cents lower for the week, led by what was a $5.50 cut in pork bellies for the week. So driven again by bellies, much of the year again occurred this week on the pork cutout value. On the cattle side, fed cattle prices more than $3 higher on the cash market this week. Feeder steers were $1 to $5 higher, while feeder calves were steady to $5 higher for the week. So better on the cattle side of the equation. The choice beef cutout value was up $5.30 for the week, really driven across the board by all components being higher. So higher numbers on the cattle side and some weakness on the hog side this week.
It's nice to end the week on a positive note because it sure sounds like after looking at this cattle on feed report, Monday's open may not be quite as positive.
Yeah, absolutely. I think when you look at getting that cattle on feed report, we're beginning to find that we got more calves to feed as we go through the remainder of 2017. The number that stuck out, of course, was cattle placements up 11.1%, outside the range of pre-report estimates. The upper end of that pre-report estimate was 9.5%. So we're growing in terms of cattle supplies. I think we saw a lot of calves moving from wheat pasture. A lot of calves coming from Mexico being placed in feed yards. It's setting the stage for more cattle and beef supplies as we move through the remainder of 2017.
Let's talk a little bit about that report and get into it a little bit more. It also gave us our breakdown of steers versus heifers on feed. And is that showing signs of contraction at all?
Well, first of all, I'll say when you look at the percentage that we got out of the report, we're sitting here at about 34% of total feed yard placements being heifers, which is up from where we were just a couple of years ago when we were getting near 30% for one report. But we still have a ways to go. We need to be talking about maybe closer to 38% of total cattle on feed being heifers before we can start to really talk about a slowdown. So we're moving in the right direction, Megan. I think we just have another 3 or 4% to go, and it's been a little stubborn to get us to move higher. So right now I'll say all indications out of the report from a cow standpoint suggest we'll have more breeding inventory still coming as we go to 2018. But we'll wait and see how the rest of the year plays out.
You have to think that the negotiations and the talk with countries like China that would give us access to another market to help find a place for all of these cattle and all this beef is even more imperative right now.
Absolutely, it is. The supply side of these markets and this cattle on feed report today just only comes back to remind us that we are growing in leaps and bounds in many ways in terms of meat supplies. And if we don't find markets outside the United States, we will find them here in the U.S. It's just at what price level we clear those markets. And so you worry about some of the price pressure that could be coming from what's cattle numbers in particular that look to me to be troublesome as we get into the latter part of 2017.
Scott, as we take a look at some of the other numbers and figures from this week, Livestock Slaughter report was released yesterday. And by a look at those numbers, really, there's not a lot of great news coming from you.
Yeah, absolutely. You know, we got our first quarter of this year's information out of the Livestock Slaughter report this week. Again, I feel like a broken record when we talk about growing supplies, but commercial beef production up 6.1% for the first quarter of 2017. Commercial pork production up 2.9% for the first quarter of 2017. Both total cattle slaughter and total hog slaughter mimic those production numbers very closely. I guess when I look at the weight side, I can find a little bit of good news on the cattle side where we're down 1% on cattle weights for the first quarter relative to a year ago. But for the rest of it, it's talking about growing supplies across the board.
Let's talk a little bit about those numbers in as we get into a little bit more. We talked about the cattle on feed report and what we need to see in that breakdown to show maybe a slowdown of expansion in the herd. What about heifer slaughter numbers as well?
Yeah, so we are starting to see some information in terms of federally inspected heifer slaughter that I think gives us another indication of what's going on from a herd rebuilding standpoint. For the first quarter of this year, we were up 10.4% in terms of heifer slaughter. That's a move in the right direction relative to where we've been, and would suggest perhaps we're trying to slow down that growth in the number of cows that we have in the beef herd. However, when you think about just how low a level first quarter of 2016 heifer slaughter was, I'm not certain that 10.4% growth here in the first quarter of 2017 is any indication that we've also stopped the growth as well. So again, moving in the right direction as we think about that placement data that we have, as well as the slaughter data that we have. At least we're starting to move in the right direction to slow down the growth. I might still suspect we're going to get growth in overall cow numbers when we get to January 1 of 2018. Again, depending on a little bit where the rest of the year falls out, but those numbers on the heifer side aren't high enough yet to really stop things.
Talk a lot about the beef side. Let's talk a little bit about the pork side of things. Barrow and gilt slaughter was up on the quarter as well. What do we take from that information?
Yeah, the 3.1% increase in barrow and gilt slaughter. All right, so we've had a lot of conversation about we have added processing capacity in the pork industry, and we're going to have more as we go through the year. That's absolutely a true statement. But I think we shouldn't forget that we need more than just having more processing capacity for what's going to be a larger run of hogs this year. We have to find homes for that growth in pork production. Again, being up 3.1% in pork supplies for this first quarter. I think as we go through the year, we're going to see continued growth. If you remember Hogs and Pigs report we were still up over 1% in terms of sow inventory. All of that just tells me we're building on the supply side. And we don't want to forget that we don't stop at the packer side of this, and that pork does have to find a home if we want to keep prices moving higher. And what's been a tough futures week for hog prices reminds me that we're back to levels that we hadn't seen since October, and we're a far cry from being through 2017 on the hog side. So the supply side of these markets can make one be worried about where prices go as we move through the remainder of this year.
Demand is a big portion of our conversation. I feel like a lot, as it should be. Let's start first and talk a little bit about domestic demand. We've made it through the Easter ham rush. We're getting into that grilling season and that warmer weather. When can we anticipate maybe start seeing that seasonal bump? Yeah,
well, so I think we do have some opportunity as summer comes for the big part of the grilling season to unfold. I think this year is going to have played out a little different than maybe some of the previous years, in that we did get that warm bump early in the year, and we got that first round of grilling already trying to unfold. So some of the growth that we might think about as we go seasonally probably has already played out. But let's hope that domestic demand has stayed strong. I frankly go, that's the very good news that we continue to see unfolding for us in what's a record supply situation, is that whether you look at consumer confidence or you look at the restaurant performance index, thank goodness we're seeing the growth that we have been of the last several months. And we're not back in a period of time where that domestic demand growth turned down. That's not a very good recipe when you got growing domestic supplies and weaker demand. So thank goodness domestic demand has been strong. And hopefully the economy continues to truck along as we work through 2017, and we can see a significant movement of pork and beef as we go through the summer months.
I was at the grocery store today, actually, and beef prices and pork prices as well were both really reasonable. I have to think that's got to help pick up maybe what's being purchased at the grocery store as well.
Yeah, and I think we might see an opportunity to see some consumers who are going to take that as a chance to buy up, if you will. Maybe buy a more expensive cut as prices have moderated from their highs. And I think that helps on the demand front as well if we get that kind of buy-up occurring. Now, for me, that's all about consumer confidence and just how the general economy grows as we continue through 2017, but maybe a good opportunity on that front for domestic demand to continue to be stronger.
I don't think we can get away with talking about demand without talking about some of our trading partners. Mexico, we talk about the role that it plays really across all sectors of agriculture. This week, it seems like they're courting a new trade relationship with Argentina. We know how that can kind of play out on the grain side of things, but what about the livestock side as well? Does that make us a little uneasy?
I think we do have to be paying attention to what some of these other countries are doing. And I think many of these countries, and we could take Mexico as the example, have said, well, if there's more uncertainty in the interest of the U.S. to be trading with us, we better not wait until that unfolds. We better be looking for those alternative markets that maybe can supply Mexico with additional pork, with additional corn, with additional beef. And those may provide stronger competition for us in that Mexican market as we go through time. So I do think trade will be critical as we continue to move forward, and giving these countries a chance to take a pause here and think about what alternatives exist probably isn't helpful for us long term as we get, again, more competition for what becomes center of plate in each of these different countries. And it's not just so much center of plate of beef versus pork versus chicken, but is it Brazilian beef, U.S. beef? All those things, I think, become much more important in some of these countries.
Scott, as we wrap things up this week, preview of next week, we'll see cold storage numbers as well as the restaurant performance index. What are some of the things that we're taking and we're paying attention, going to need to pay attention to next week?
Yeah, I want to look at the cold storage report on Monday. Thus far, we've seen that we've been able to move these additional supplies of red meat and beef on the markets pretty easily. I hope we don't find a cold storage report that suggests we're starting to get a buildup in freezers already. That might spell some more troubling issues for us as we go through 2017. So a really good look at whether or not demand's continuing to keep up in terms of what's been those growing supplies. And then to close the week next week with the restaurant performance index, just another indication of whether that demand's holding in on the food service side of the equation, if you will. So very key reports for me on the demand side next week.
Scott, to wrap things up, one last question. You talk about the demand, and we talk about these reports and what it means and indicates for our products and our production here. What do producers take from this information? Why are these numbers so key to them and managing their profitability on the farm?
Yeah, so you ask a really good question, and I guess I come back to when you look at what's happened in 2017, and I don't care whether you talk cattle or hogs in this case, prices have frankly been higher than any of us would have suggested probably early on. I don't want that to lull producers into a false sense of security that for all of 2017 that these prices are going to remain higher. They should be paying attention to the fact that we talk about just the large amount of supply growth we are seeing this year, and that we have been propped up by, I think, what's been very good demand. Being able to pay attention to just a little bit of falter in demand and the fact that maybe supplies are even going to grow a little faster than we thought ought to make us think about where we close 2017 in terms of prices. And maybe it's a chance to take advantage of some markets before they do turn much lower or potentially much lower as we go through the year.
We'll talk to you again next Friday. Have a great weekend. To have our weekly livestock market update delivered to your email box every Saturday, go to brownfieldagnews.com, click subscribe. You can also submit questions and comments, and make sure to check out our daily market minute with John Perkins, and that can be found on Brownfield TV. Have a great weekend. I'm Megan Grebner on Brownfield.